Hi guys, it's Dips Maverick from the trading room. Hope you're all good. I'm going to be doing a video for you all today. Something I actually promised MT a while ago, where I would create a video that discussed things like risk management, how I handle my risk management, and how I believe many of you should look at handling your risk management as well. And especially some of you guys that are struggling in the room, it's important that you look at what your risk management looks like, how many pips you're trying to take versus how many pips you're actually trying to risk. Now I've been in the room for about 3 years, 3 years plus probably, and I actually struggled at the beginning with getting my risk management right. And it's only until I learned that actually people lose trades, and that's okay, that I became a better trader. And at the same time, everybody loses trades. And this is where you really need to learn to accept your losses. And this is where risk management comes into play, because if you can accept losing a small amount to gain more, then you know that's half your battle. That's a mental battle that you're dealing with. And I'm going to take you through a couple of different videos today to explain where I would put my stop loss. I was actually talking to Phoenix in the session earlier today about stop losses and the ones I use, and I told him that I use a 10 pip stop loss for all the pairs except the GC, and with the GC I use a 15 pip stop loss. However, whilst that's true in most cases, there are times where I use a smaller stop loss as well, and that's what I'm going to take you through today, because what you need to understand also is that the forex market is an uncertain place, and if you can accept that, and you can say to yourself, well, even though the setup looks like it's going to do X, there's always that chance it's going to do Y. If you can accept that, then you're already in a much better place than you were yesterday, because that's why you have a stop loss. The institutions that operate in the forex market, they are there they are honestly there to look at opportunities and see how they can take advantage of retail traders such as ourselves. And if they know you're using bigger stop losses, or they believe that there's an opportunity to go after a large number of stop losses, or too many people are hedged in a trade, are in a buy signal, they will look to drop that market, because that's an opportunity for them to take a lot of people's money. And that's what game this is. The game is, you are always, when you win a trade, you have actually taken money of someone else, and MT talks about that in the room. Um, so yeah, let's get into it. Some of the stuff, I mean, I'm not showing you anything absolutely new here today, because shout out to people like Jazz, Anissa, MB, PP, who I've learned a hell of a lot from, and it's because of them I've become a better trader over time. They it's what am I saying? They are the ones that have shown me, where I should be looking for my entries from, how the one and fours work, how the eight and dailies work, and it's through talking to them in the group, or little pieces of advice they've given me, that things have come together. And the next part for me was not only understanding direction and where it's going, but also knowing when to get out, and also knowing when a trade has not gone my way. I have blown a lot of accounts because of risk, because of not having a good risk management strategy. And I also know a few other guys in the room that have struggled with the same thing. So hopefully today what I show you is going to help. What I've done is I've picked a few videos where actually it's not the clearest day. The one, you're not necessarily getting a 1 in 4 hour signal that is basically determining your direction for the rest of the session, or no signals to tell you that a number two is ready to kick in, because you're sitting at the 1 hour orange line and it's ready to drop. So what I'm going to do is help you understand how risk management works in situations like these, because they are the most uncertain situations that you have. And this is where stop losses and how you use your stop losses really do come into play. So yeah, let's get into it. Kick off. So let's look at the first video. The first video is demo 56, and with demo 56, one of the things when I was trading it during practice, I noticed was obviously that in situations like this, well, we're going to look at the GU in this example, but in the GU, if we look at it, we've got a daily that's actually broken through the daily BB band. No daily signal on there, but the daily candle has broken through. We've got an 8 hour down. We've got a 4 hour blue. We've then got a 1 hour up with a 1 hour blue. And we're not even going to go into the. Actually, we will. The 30 minute. We've got a red, yellow, mim. We've had a few 15 minutes signals as well, all saying up. It's broken above the 5 minute is broken above um, the orange line. So to me, I would be looking at this and saying it's up. However, there is a lot of conflict. And the reason I say conflict is, well, we've had this 8 hour signal on the head, which has just finished as the hour has turned. So we really need to see if this 8 hour signal has got more in it. But then at the same time, what I see regularly, and actually something MB um, pointed out to me a few months ago, I think yeah, I think it was a couple of months ago, and was really useful to me was that actually if 4 hours don't have a blue, then there's a good chance, whilst they might have a bit of a bounce, um, as a new candle, they will go for more. So I'd be looking at this right now thinking, well, I've still got this 4 hour that has, yep, it may have just finished on the previous candle, but it might still be in control. I've had this 1 hour, which has taken price above the 5. What do I do here? This is where, questions arise, and you say to yourself, well, actually, I am biased up on it right now, given what I've got going on here. But then at the same time, this could be ready to just absolutely crash down after it's hit the 30-minute line. Am I confident it's going to get to the 30-minute line? Yeah, probably, but we're already quite close to it. Um, there is a bit more, there is a few more pips in the market on the GE today, in each candle. So, what I would do here is I'd obviously monitor where it's going, but because I've got this 1 hour, I am still going to be keeping an eye on the ups, because the other thing I've learned is that, and I've seen this on quite a few days, is even though like some days you might have a daily and a 1 and 4 show up and they don't stand a chance. Another day you might have a daily in the opposite direction, a 1 and 4 shows up in the opposite direction to that, and they go all the way to the other end of the 1 hour band. So this is why risk management is important. And these are the days where you're like, well, oh, actually, I had a daily. Why didn't it work? That's because something that obviously Jazz mentioned in one of his recent videos is that stocks need to, shares and price movement needs to go up and down. And this is where institutions are really clever, because at certain points they'll say, actually, we want to take it a bit further than we normally do, and they will help push that price down further. Or if you're in a buy, the bulls will come along and they'll make an even larger attempt to drop that price. So you just need to think about these things and say, actually, it's better I save my money instead of give it to them. Right, so let's say we are looking for ups. We're looking for ups on the GU, because that looks like the most immediate setup. Whilst it may be down further down the line, because this is already broken through, it looks like it's coming back. There's a good chance that we're going to see this get to the 30, possibly even the 1 hour. So let's forward. See if we can find a trade that is good enough to take up. Right. So you can see here that on the GU, we're getting quite close to these bands on the HA chart. So I would be looking here to take this up. And yep, we're pretty much on it. So let's say we get in at 73, we take it up. That looks like a pullback candle. Um, right before it, we had a few pullback candles, but I think that's going to go up. Yes, we've got this 15 minutes. A purple, though, they're not usually always the strongest. So I'm still thinking that this has a chance um, against that. And I could be wrong, but let's see. I think there's more upside in this still, especially because when you look at the way that the charts have moved, things have basically this strengthened the upside. Also, when I see this set up with the blue and the signal next to it, usually it wants to go higher than this, especially when the 1 hour has survived on the next candle. It usually wants to get a bit higher, maybe closer to the 1 hour and drop. So let's say we're in this. We took it at 73 rather than 72. It's coming down a bit more. Fine. Where would I put my stop loss? I'm going to pause it here. Right. You've got two choices with your stop loss, right? So if you're at 72 or you're at 73, the most the best place to put your stop loss is below the 5 minute BB band, right? This is where I would have a 10 pip stop loss here because I can see that that's 62. I may even go as far as put it 1 or 2 pips further below this BB band. So let's call it 60, right? So I have to put this at 60 now. Now, for this trade to win for me, that means it needs to go to 83. It needs to go to 83. Let's say I put it 1 pip below here. It's 62 right now. So I need it to get to 83 because that's guaranteed me. I've had one-to-one on this risk management plan, right? The other option I have is I put it below where the BB band stops on the HA. Now this is a much tighter plan, and actually I personally don't do this. In certain circumstances I will, and I'll show you when. But in most cases, when price is looking at heading in the opposite direction of its existing trend, I would use the 5 minute band as my stop loss. So let's say I've got a 11 pip stop loss here. Right, let's press play. So that means I need 11 pips, which is 83. So if we push, oh, where's that gone to? That's gone to that. Oh, that did go to 80 something. Uh, rushed it. 81, 84. Fine. So that jumped to 84. So we've got a winning trade there. So whether you took 10 pips or you took 11 pips, 11 pips is one-to-one for your risk management. However, you could have moved your stop loss when these bands flipped to 63 or 64 because it flipped. So as soon as you saw that flip, when that candle finished, you was in the trade, but you could have brought your stop loss slightly higher to protect yourself and then moved your take profit to 10 pips and you would have won that trade. Hopefully this makes sense because you're going to see examples of why we use the 5 minute band as well as our stop loss area and why I use it anyway. So here we're seeing obviously prices come back down. We want to see momentum changing. We want to see what it's going to do next. We've got this yellow that's appeared. We're still looking at ups. We want to see if this is going to be able to push this band down. And we want to see this 15 minute, which it has got something in it now, do its job. So we've just seen it push. Right, great. So could this have more in it? Yeah, because we've got this 4 hour, which probably could want to even go further past this band. We've got this 8 hour that obviously was on the previous candle as well, and that could still want to push. So is the momentum to the upside still? Yes, because what until Jazz says this all the time, and it's something actually I noticed as well that until this candle breaks past this band, it is still a second move to the upside. And when we look at second moves on the 5 minute bands or the 15-minute bands, those second moves exist on all time frames. So we need to obviously look at that as well and say, all right, well, for this to still go up, it could be on a second move because it hasn't gone past the lows of the previous candles. And now we're getting a yellow as well. So this could be a trade to the upside again. So you may have taken 10 or 11 pips here, but are you going to risk that all for this yellow? That's the question. So let's fast forward. Right, that yellow has now closed. So we're looking for some information. Oh, we've got a 1 hour here. We've got a 1 hour. The hour's just changed and we've got a 1 hour here. So suddenly this trade looks good, right? And there's a good chance it's going to the orange road. So let's say we get in that at 60. Let's say you got the arrow here now. So let's let it. It's going to come back down a bit. 68. All right, fine. Let's take it at 68. Pause again. I'm going to pause the video again. Even 67 you can take it at. Now your new stop loss goes under where this yellow where this yellow arrow is. So that is approximately, well, it looks, let's call it, it looks about 61, 62. I'm going to call it 60. So 67. You see now we have a stop loss that is less than 10 pips because we've taken it out 67 or even 68. We're on an 8 pip stop loss at 60. That means if it breaks this band and hits 60, then we are out of the trade. But we've got a 1 hour in our favor. For the next hour at least, it's a MIM. So I'm interested in that MIM. And for the next hour at least, I don't believe this is going to go down. Do I think it's going to go down in the long term? Yes, I think it's got more downside in it. And this is why risk management comes in. Because for the next hour, I believe it's up. But for the rest of the time, I believe it's going to go down again. So if I want to take this trade, I need to be in a position to take it with my risk managed. Yep. So great. So that's brilliant because in our last trade we won 11 pips and we are only risking 7 pips here or 8 pips. We are not risking the full 10 to completely wipe out what we made in the last trade. So one thing is for sure, if we do lose this trade, we're not going to we're not going to be in the minus today. Right, press play. So here we go. So our stop loss is at 60. Where are we aiming for? Let's say for argument's sake, we are aiming for the 1 hour road. Right, that's great. That's gone. So 62, we got in at 68. That's a 70. It went up to 10 pips. It went to about 77, 78. Right, we can either walk away and take those 10 pips. If not, we believe that's red yellow now. We believe that's going to the 1 hour road. It looks like it's on the second move on the 30-minute. So, all right, let's say it's going to the, let's say it's going all the way. Yep, it's gone up some more. We're sitting pretty comfortably because our stop loss is down here. We entered here. We entered at 68. We're still about 8 pips up. But then, like, obviously it's come back down. We're not sure if it's going to get there. Oh, it's gone up some more with these pullback candles. Yeah, you could have taken some of these trades, but then look what happened. You had a sudden surge within a 5 minute candle, and this dropped all the way back here. But what did it not do? It did not break the 5 minute band, and this is why you have a stop loss here, right underneath the band. It got to 62, but it didn't get to 60. So our trade is still alive. Could this still go and touch the orange road? Yes, it can. If it doesn't, we're not going to lose much. If it does, however, we have quite a bit to gain because I believe that's probably going to be about 20 pips or something. So keep fast forwarding. Yep, there you go. It's going, it's going, still going, still going. Right, that's literally on it. So on it was 87. Let's say you didn't get out there. Let's say, right, 87. Yeah, you had a bit of time to get out 87. You got a band flip here as well. So let's say you got out at 80, 86. That's 18 pips, basically. If you got in at 68 and you got out at, 86, that's 18 pips. So you've just won that trade and you waited it out and trusted your bias and trusted the signals to do what they do. Right, should you carry on taking up? No, you should not carry on taking it up because this 1 hour MIM has done its job. Could it go up more? Yes. This is where, like, just because it's touched the orange road, there's no guarantee that this is gonna not drop away or not continue going up. This is where you have to wait and be patient and see what the setup says. Um, I think we're running out of video on this anyway. So the point here is anyway, like the point here is that you had a good risk management strategy and you earned a lot of pips and you even managed to get a 2-to-1 trade in because which almost actually stopped you out, but it still became a 2-to-1 trade. And that's because you managed your risk correctly. So you won your first trade, yes. Your second trade, you entered that, and again you set a stop loss that was actually less than 10 pips, which meant that if you did lose that trade, you were still not going to end up in the minus for the day, but you won that trade. So let's say that's all you took for the day. That's 30 pips, and that's a good day. Um, we could see this is actually coming down a bit, but there'll probably be a bit more bounce in it first. Oh, it's gone. You had the yellow as well. So actually, if you believe this is coming down, which I still believe that this is coming down, something I mentioned a little while ago, then this is where you can wait for it to come back up. Your stop loss is going to go. That's this yellow marker, this yellow arrow is at 87. So your stop loss is going to be 89. So if that gets to anywhere above 79 and you want to take it down, that option is always going to be there. But you don't take it down now simply because that means at 76 you basically are risking your well, actually you're risking about 13 pips. So that means you have to get 13 pips or more in your trade to make that trade worthwhile to you. By following this method, you're going to end up taking a lot less trades and you're going to make a lot less mistakes simply because you're not going to just try and enter something because it's hit the orange line. You're going to look at where your stop loss needs to go and whether that's a good risk ratio for you. If you're putting something at a band that is 25 pips away and you're trying to get 5 pips, that doesn't make sense. Come on, guys. So this is why I manage my stop losses like this, and it stops me entering really bad trades. It makes me look for the setups in the one and fours, which are the most important thing. Jazz will bang on all day about the one and fours, and he's absolutely right. Only until I learned the one and fours properly did I start trading correctly. And then I guess what I applied to the one and fours afterwards was actually what do the eight and dailies actually do to the one and fours, and what are the 8 hour and dailies capable of. So going through all the trading videos to watch that will help you. But this is a method to get your risk management right. Getting your risk management right means that you can actually take less trades and not blow your account or not end up 30, 40 pips down for the day. Trust me, I've been there, guys. Right, let's move on to the next video because see, here's a possible entry anyway, 81. If you do think this is going down, you might want to wait for a 15-minute to pop up to kind of confirm that the 4 hour and 8 hours might want to do a bit more and the daily might want to carry on. Would have been nice to see a daily signal here. But yeah, I mean, if you want to wait it out, that's what you do. You have a look and you make sure your stop loss is right. So if you are going to take this round and you lose, you haven't lost hardly anything. Right, this video's reached its end. So right, let's look at the next one. I'm just gonna have a drink. It is really hot today. and I'm from London, so we're not used to days like this where it's just unbearable, especially in my office. Um, right, let's get the next video up, shall we? What am I looking for? Videos. All right, let's go to 56. Oh, we just looked at 56, didn't we? 51 I'm looking for. Right, so this is video demo 51. Um, and again, like the reason I wanted to look at this is because um, what we generally, what I generally found with this is it's not the easiest system to trade, and I'll explain why. Um, so if we look at we'll look at GU. We've got a 1 hour, we've got a green, we've got a 15 showing up. We've got a 4 hour now popping up. We've got an 8 hour, but we've got a daily up. So what do we do in this circumstance? This is again when risk management is really important. Some of you may view what's happening here, this cluster, as potential second move taking place, especially because you've got your 1 and 4. This is where I was talking about you need to wait, especially going against dailies is pretty crazy. But some days the 1 and 4 do take over, and they can take the daily all the way back to where the daily started, especially in circumstances like this, because the trend is ultimately quite heavily down. So we don't know for a day like this for me would normally be, well, it could just keep going up, or I could take it down. And some of you I know like we do enter on when you see these little reds, especially if you saw an 8, 4, and 1, you'd be like, yes, I'm in the money. But situations like this is where you need a stop loss, because if you did get in on this green that appeared, didn't we just see a green somewhere? I swear I just saw a green. Yeah, we did. It's a bit further on. There it is. So if you decided that I'm going to get in early and you got in on this green, well, what you would do is, firstly, I don't recommend this, but if you did and you needed to protect yourself, then you might have taken it at 85, 86. Your stop loss goes at 91 or 92 because 89 is the high. You'll see in this circumstance that it's not, even though you're seeing all of this, it's not ready. You don't have the blues, and even if you had a 1 hour on the, if even if you had a blue on the 1 hour, that's not enough. Even 1 hour blue and a 4 hour, even that's not sometimes enough for you to say that this is definitely going to drop for a little while. And you need to assess the setup being strong. What 1 and 4s together are strong and which ones are not as strong. This is where this is where judgment comes into play, because you've got to let them play out a little bit. And it's almost what Jazz said in his previous video about, well, just let it keep going. Wait the first move out. Just wait the first move out. Um, what I'd be still looking for here are ups. But I wouldn't be taking them because I'm cautious of these. Because I've got the daily, in my head, I'd be saying, well, this 1 hour could be going to this orange road here, especially when you've got an 8 and a 4 hour playing in. So let's see what happens. Right, it's gone up 89. let's say we took that trade for argument's sake, 92, we're out. So we lost 4 pips. We lost 4 pips there. We shouldn't be in this trade, if I'm honest with you. I wouldn't be in it in that direction. But this is like I did used to get in trades like this in the past, thinking, oh yep, I've got a 1, 4, and an 8, and then at the same time I didn't even protect my I wouldn't even have as good risk management of only 5 pips. So you really want, if you when you're turning price around, this is where tighter stop losses really do come into play. So this thing has carried on going up. And what price were we looking at actually? What price did we say we entered? We said we entered at about 86, didn't we? So let's say I didn't have that 5 pip stop loss in place. 86, that's now, that went to 0, 0, so it's pretty much 15 pips against me. So it's gone to it's 20 pips against me now, 30 pips against me. I'm in trouble. 30 pips against me without a stop loss, but it's, this is turning around. It's the trend is going to kick in. The downtrend is going to kick in at some point, right? This is exactly why I used to think that, oh yeah, yeah, don't worry, it's all going to kick in. It's all going to be fine. And the next thing you know, I've got a trade I'm sitting on, which is 30 pips against me, and no sign of turning around. That's now 40 pips against me. Um, and yes, the 4 hour blue is finally here. So yeah, we should see some turnaround now. But I'll be sitting in this trade for the next day or two. I don't sit in trades for day or two anymore. I don't do any of that because I would have known, nowadays I know to stay in this up until I have a good setup. What is a good setup then? Let's see if we get it here. Right, we've got the 4 hour blue. We've now got a 1 hour, a 30 minute, and a 15 minute. So, do we look for do we look for downs? Well, we certainly look at a second move which came here. I would personally be sitting this out because of that daily still. But does it go? Yeah, it does. It goes quite a bit. Right, am I going to have a trade here because it's gone back up to the bands? I've got a yellow. Bands got broken. You've got a yellow. 1 hour's disappeared. Most likely it's going to come back. Let's see, are we going to get a trade here? Band flip, so everything's looking good. Right, this is where I'd be looking for the trade. I would have sat out all of that and I'd be looking for a trade here because now the band is a lot closer, so it's at 29. I would have got in around here when that yellow came. In fact, I would have waited for that candle to finish. I would have waited for this one to start going up and I would have waited for this to start coming down. So what's going to happen is, right, so let's say, where's my stop loss? 33. So 33 is where my stop loss needs to be. That is a bit high, I'll be honest with you, because the price is at 21. So that is 12 pips away. So am I going to take that trade as much as I want it? No, I'm not. Ban flip, right. Price has gone up again. 21, 29. The ban flip is at 29. So I'm going to set my stop loss 2 pips above, call it 31. Can I get a better price to get in? Right, it's gone up some more. Great, momentum is green. I want to wait it out a little bit. At least see double. There's a lower low on the HA forming. Is it going to go? Remember, we've got this daily here, and I'm actually trying to turn price around. Pretty crazy, right? This is what I actually, in the past, this is what I've done. Nope. So had I got in, I would have lost. I would have broken the BB band. I would have got to 32. Is that 31, 32? There you go. I would have got stopped out again. What would I have lost? I would have only lost 8 pips, 7 pips had I got in. Um, but you see, I would have normally in this situation, I would have been looking for that down trade, thinking that actually because I've got the 4 hour blue, but the 4 hour blue has disappeared now. However, it was still here at this point. So this is where risk management is really important because if you do this, if you do get in and you jump the gun a bit, then you're just going to be protecting yourself. So if I got into this, I would have lost 7 pips. Call it 10. Call it 10 pips, I would have lost 10 pips. That's okay. I'm going to get another 10, 15, 20 pip, 20 pip win somewhere else. I can live with those losses. But what I couldn't have lived with is what I showed you my loss was all the way down here, where because I didn't set a correct stop loss and we had the signals. The signals were there saying, yeah, like it's rare they all correlate like this. They're all correlating. Last week we had a similar situation. We had a daily and we had a 1 and 4 pop up. And the 1 hour went all the way to the other side of the BB band on the 1 hour chart. So that day it kicked in, whereas today it hasn't kicked in. When I say today, I'm talking about this video. It hasn't kicked in. So this is where you have to assess, well, if am I going up or down? And if I do think it's going down, then I'm willing to risk in this circumstance, what we're looking where we are in the video right now. Right now, you're willing to risk 7 pips to find out whether you can get to the bottom of this BB band, which is 66. So that's you're risking 7 to get 20. Yeah. Yes, we know that obviously in this we know that most likely we should be up in this scenario, but we've seen, as I said last week, I saw the opposite happen. So this is why I say the forex place is an uncertain market. I hope that I'm not just ranting on about this, but it's actually useful because I've been in these trades in live demo. I'm not live demo, but live trading. I've been in these trades in live trading and lost a lot of money. And it took a lot of money for me to realize how I should be doing it if I was trying to turn price around. Um, so, anyways, this video, as I said, it's a tricky one, this one, because when you see a 1, 4, and 8 all together, you're thinking, yep, this is going to go, this is going to go. But then at the same time, you're cautious of that daily. But when you get all three against the daily, you're going to be these, as I said, mistakes. These are the type of mistakes I would make, and this is why I protect myself, and this is what I want some of you guys to do. I want you to protect yourselves so that you can pick the right direction. Let's say you got this wrong over here, this green that suddenly went, 40 pips against you. Let's say you got that wrong. You would have been out at this point. And at this point, you could have said to yourself, well, you know what? I am not going against that daily. Yes, I've lost 7 pips, but I'm not going against that daily again. And you would have been at this trade point, and you would have said to yourself, well, actually, there's a trade here because it's just got to that band. Could I take it up? Potentially, I could take it up for some, yeah. Um, and then you'd be like, oh, right, so the 1 hour showed up. Should I be taking it down? No, I'm going to wait that out. Um, Again, you're getting a yellow here, so you might decide that, yeah, I'm going to get in here. And what I can do is I can set my stop loss somewhere at like 97, 95. And if it breaks this band, then sure, I'm out of this trade. And this is where you're going to grab a winner because this is going to go. Let's say you did get in when momentum changed, and you got this up arrow 09. Where does it go? 09 has gone to 24. Does it go some more? Look at that. There you go. There it is. Um, And that's when you were like, well, there's just too much strength in this daily. But you're in this trade now, so yeah, you lost 7 pips here. You got in here and you realized it was turning around. You might have got out at break even, or you got out 5 pips short here. So, right, fine, you lost 7 pips here. You lost five. You lost 12. But from this trade, you've gone from I think oh 07 to 38, 35, and you're still in it. And now the 4 hour blue showing up. Again, but you've got like 20, you've got 20 odd pips there, potentially more. Yeah, you'd probably, yeah, look, it's gone. It's carried on here. You can see 44, there you go. And you would have got that green and you would have got out, but you would have taken 20 easily and you wouldn't have lost. And you would have had a risk management strategy that's much better because you've put your stop loss under the band and you've let this ride. You've said, all right, well, I have to get more than 1 to 1 for my trade. And this is how you will win in forex, because what MT has done here is he's given you signals to tell you when to stop going in a direction, when you should potentially start going in a direction. He's giving you more than what a naked chart is going to give you. He's giving you more than what any other signals out there are going to give you. So please, please, please get your risk management right. I've got one more video to show you. Um, It is 54, I believe. Right. Yeah, I've tried to use as many recent videos as possible as well with these, just so you can get a good example of, how this works. And again, they're the trickiest videos. I've picked this video because Sergeant Pippa used this video in his last in his video that in his last video that he did. And if you are looking at the yellows as your method of trading, which I don't think is the worst idea actually, and especially the way Sergeant Pippa is looking at it, looking at yellows and looking at where it is on the long-term charts to see whether it's got potential, then you can use this methodology really well. You can use a very good risk management strategy, because let's go to where that happens, the move that we're looking at. Right, so if we look at GU again, we see that this yellow pops up. I'm just going to pause the video. We see the yellow pop up. We're going to wait for this candle to finish, but what Sergeant Pippa was right to point out was that, well, on the daily you're hitting the band, and yes, you've got a daily signal against you, but you're hitting the orange road, which is quite close to the band. You then hit the band on the 8 hour, you're hitting a band on the 4 hour, and you've hit a band on the band's flipped down a bit, but you've hit a band on the 1 hour as well. So is there going to be a trade here? Yes, very likely there's going to be a trade in the opposite direction. However, let me let me propose this to you. What could happen is that it bounces 5 pips, and then this 1 hour goes super and it shoots through with a 4 hour mim in place. This could completely break that and keep going, flying through. Whilst this daily wants to make its attempt for the band. Yes, there's not that much on the 8 hours, so I guess let's say an 8 hour signal appears on this new candle, on this candle next to where the red is, and it goes completely wrong against you. This is why stop losses are important, and this is why risk management is important. So let's say we are going to get into this to the downside. We think it's going down. Great. What do? We basically wait for this candle to close. Has it closed? Yes. You're currently at 05. We want to see if there's a bit of a bounce here, and you want to be a bit more riskier with this. So what you do is you say, I'm going to get in very soon, as soon as I see an opportunity. Right, this is coming down now, so 01 again. Let's say you get in early, 02. 02, you're in down. Where does your stop loss go? It goes above this yellow arrow. So that price looks like 120, I think 120.08, I think 122.08. Is that oh 08? Yeah, it's oh 08. There you go. Lucky guess there. So 10 is where 122.10 is where your stop loss goes. 2 pips above, 2 to 4 pips above. Because if it breaks that, the reason I say 4 pips sometimes is because sometimes it shoots slightly above it and comes flying down. So you might want to go 4 pips above it. That's up to you. That's where you need to work things out. Um, let's say you're in there, so you got in at oh 02. So now you're only risking 10 pips because you're at 10, no, oh 02, you're risking 8 pips, sorry, because you've got in at oh 02 and at 10 is where your stop loss is. So now this is an 8 pip stop loss. And what can you get from it? Well, you can potentially get 10, which I would say is a minimum amount from this trade, or more, right? And you could say, all right, well, I'm going to go for 2 to 1, 16 to 1. The only way that I'm wrong here is if this band breaks on the 1 hour, because that 5 hour band is currently in line with that band. So what happens? I think you guys all know what happens anyway, but the trade develops and you didn't try to get like there's a second move here as well. Actually, should we look at the second move as well as a stop loss? Right, 98. Again, you could have got in here with a 10 pip stop loss and said, all right, fine. Is this a second move? The band is flipped. I'm interested in this. You could have got in at 98 and said, fine, I'm putting a 10 pip stop loss on it, or 12 pip stop loss. And you could say, well, in this case, you need 12 pips. You don't, 10 is not enough. Yeah, you want 12 pips because to stay 1 to 1. Um, if you really like the other thing, I guess that I should mention are things like obviously there's the commission side of things, so you might even need to go after slightly more to stay 1 to 1. But there are times where I ignore the commission and just do it 10 to 10 because it's still to me that's still right, and that's because I know what my win rate is pretty good at 80-85%. So I know that I can do a 10 to 10 um, 10 to 10 stop loss versus take profit. I'm sorry, a 1 to 1 TP versus SL. So you need to obviously figure that out. Let's see where this goes. I actually can't remember. 60, 76, 69. So it went down quite a bit. If you were in at oh 02, there's potentially 30 pips plus in it, and if you stayed in it, then yeah, great. But if you just got 16 pips from it, then that was 2 to 1 for your 8 pip stop loss from initially, and you would have been out quite soon actually. But this is how it's okay to take risk. This is why losing is okay, because when you do lose, like we saw in the video before, where I basically went and lost a couple of trades and then won a really good trade, I still finished out in the plus. Situations like this where you're like, oh, is that yellow it? Is this the one? Um, well, there's no point leaving a stop loss open or having a 15 pip stop loss to find out. If this yellow is not the right place, then you're gonna know when it's gone 2 to 3 pips past this high here. So accept your losses and trade better, guys, because when you say that I'm gonna use this methodology of stop losses and taking profit, you're gonna need a smaller win ratio to finish in the plus every week. And this is really where it needs to go. I mean, the next step is something like what John Wick does and really holds the trade the whole session. And even I don't do that, but I would love to do that if I could. Thing with me, I do like to take profit once I get to a certain point. So, um, and I've seen quite a few trades go against me when I have done that. So, like I hope this video was useful, guys, because I just want, like, obviously, quite a few of you talk about stop loss quite a lot, and I just want everyone to have better risk management because they're going to find that they win a lot more. And it was only until I changed my risk management that I realized that actually this is a lot easier. That I was making it a lot harder than it needs to be because some days price might want to go somewhere immediately. Other days it might not want to, it might be going there. You might be right that it's going to the destination you think it's going. It's just it might want to take a different route and it might want to go the other way first. Um, but don't don't risk it going the other way thinking it's going to come back anytime soon. If it's not a good trade, have a good risk management strategy where you protect your trades. And that way you don't marry your trades either. Um, I think I'll leave it there, guys. But yeah, shout out to MT. Thank you very much, MT, for this system because it's just fantastic. The system is fantastic. I think that anybody, if they use the right risk management strategy as well, and they work out what strategy they want to use, and you just can't go wrong with the system. I traded without it, and it was not good news. And it's only until I joined MT's room that everything really has changed. So thank you very much, MT, as well. But yeah, guys, if you got any questions, just shout out. Hopefully this video made enough sense. I guess in summary, the one thing I want to remind you is that the bands on the 5 minute on the 5 minutes charts are quite good places for risk management. And when you want to get really tight, look at the HA bands and say, well, I think that's going to go up before it goes down, and set your stop loss above below those bands instead. But I do say the 5 minute bands are one of the best places to have a stop loss because it's tight and it gives you enough room to let your trades, really pick up momentum when those long terms kick in. Anyway, guys, this is Dips Maverick signing out. See you later, guys. See you in the room. Bye bye.